What's up, guys? Day Trader Knockouts here. I got another video for you. We're gonna do a little bit something different than what we typically do because typically before I've been covering a lot of day trading and my progression as a day trader and the journey that I've taken. I'm gonna change it up. I'm gonna talk more about long-term investing actually. And the title is correct. I have had year-to-date returns as high as 270%, which for me is a very big achievement, and I'm very proud of it. And it's gonna keep on getting better and better. So I just wanted to cover that with you and exactly cover some of the ways that I was able to do it, talk about some of the companies I did invest in, some psychological things that are important for you to be able to have growth in your portfolios. And overall, just want to talk about something that I love so much, which is investing in the stock market. So with that being said, let's get into it. And also keep in mind, I'm not a financial advisor. And again, you got to do what works best for your portfolio and for your investing and day trading or swing trading. Again, I'm just some stupid 24-year-old that you should not listen to. But I want to be very clear and very serious, very honest though. I like to be upfront and honest. When it comes to the growth that I did this year, everyone's journey is different. So some people will have slower growth and they don't prefer to invest into individual stocks. They prefer to invest into ETFs because it's safer overall. If that's you, go for it. And then there's other people that are going to have better year-to-date returns than I did. So all I wanted you to know is that, again, do what works best for you and just make sure that you don't just fully try to copy me because, again, it might not fit your psychology. It might not fit your financial needs. It might not fit your current situation in life. Depending on what it is you want to do, you should not do everything, just copy it just because. You should do what works best for you. Now, I want to cover, as you can see here, because you can see, I know the cameras are here, but my Robinhood portfolio is actually on this screen right here. So if I keep looking this way, it's not because I'm crazy. But my Robinhood portfolio, as you can see right now, it's at 155.89%, growing 12 grand. And the all-time highs in my portfolio is October 14th, 2025. Had grown to almost 22,000 at 270.60%. And we started off with this amount of capital right here. It wasn't exactly that amount of capital, the 8,088. It's just that when I first started, it was closer to more like 4 to 5 grand. And again, I continued to dollar cost average. I started to take some profits and I took some money out. I put some money in. So things changed. So it's at 8,088 bucks right now, but it was roughly 5 grand is what I put in there, 4 to 5 grand. Actually, no, I started off with 2 grand and then I built it up to 3 to 4, somewhere around there. Now, some of the companies that really are giving me a big impact. First off, QBTS. That really, if you can see in my portfolio right here, I started off negative and then I had a little bump up for a second. And then I was constantly for the course of, this was March, so March, April, and then May. So for 2 months, I was pretty negative, I was pretty negative for a while, but I did hold strong and I did have a plan. And then right there. And then I took profits. I believe it was somewhere on the 23rd. I want to look up the history, exactly how much I did take profits and what day specifically. But I know for a fact it was somewhere here in the May. It was like May 23rd, I believe, or May, somewhere right there. Anyways, that really did help. And then now I took some of those profits and I put it into other companies that I truly believe will grow for me in the future. Whether if it's in a 6 to 12 month period, who knows? It could be that short, or it could take anywhere from 2 to 5 years, maybe even 10 years. I'm staying patient. I'm sticking to my plan. I continue to dollar cost average, and I continue to do what is needed for my risk parameters and for what it is that I need to do to grow my account. Now, the companies that I currently have in my holdings right now, individual, I do have leap option contracts for NVIDIA. I just have one. And then I have 10,000 shares of Castellum CTM, very good company. It's a very good opportunity in my opinion, but you got to be okay with risk and uncertainty, which I am. Big Bear AI, kind of the same thing, but it has a little bit more, it has a lot more popularity than Castellum CTM, and I don't really care about popularity. The popularity has nothing to do with if I decide to press the buy button on a company. And then you also got LAES, SealsQ, another quantum company. Same, not exactly the same as QBTS, different, but they still are in the realm of being in the same market. So now, just so you know, I wanted to cover exactly what it is. I just want you to know exactly my psychology and what type of research I do. So not all of this I came up with myself. I did have a mentor. His name's Will Rich. Shout out to Will Rich's Stockmates. Great community of people. An awesome dude. I highly recommend that for any. Well, he's much bigger than me. So if you've seen my video, you probably already know who he is. But regardless, he gave me good advice, and he's mentioned things such as the most important things he likes to look at is market usage, the financials, and then there's one other segment, little um, section that he says. I can't remember that third one, but I'll add my own third one that I put, which is innovation. How well does it go in alignment with the needs and wants of the future? And is it trying to combat things like, the growth of AI and tech and all that? Is it trying to stay stagnant and stay where it is today or stay in the past? Or is it working with how things are evolving and moving? Now, for example, Big Bear AI, for example, they had great market usage. They have a lot of their technology over all airports in the United States of America. They continue to grow, gain more partnerships in the tens of millions, hundreds of millions. When e- Ever since I first invested to it, all the way back in May of last year, they've continued to grow and grow and grow and grow. And they also have very good leadership, in my opinion. He is a little bit quiet, Kevin I'll mispronounce it, McLean. I'm an idiot. What can I say? But just look up his name. I know it starts. His first name is Kevin. He does have good connects and good experience and good leadership experience to be able to help the company grow. And he does have networking in the market that Big Bear AI services, which is defense, and they will. He basically has got all the connects, and he also has all the knowledge and the experience to be able to do what he needs to do to grow the company. Now, in regards to some of the research I've done, I looked at people's 10Ks. I look at their, the annual reports. I would look at the rest of their financials. I look at quarter over quarter. Did they continue to grow? Are they reducing their debt? How much cash do they have to be able to on hand to be able to handle for losses in in the near term future? For a million reasons, business expenses. Maybe government contracts slow down for a little bit and they have to be able to handle a shaky situation. So yeah, basically the second segment that I said, the financials, you got to look at and take that into consideration in regards to uh, if how well does it how well are their financials, and as a business, how well are they growing? And then third, innovation, as I mentioned, they have their technology everywhere. It's big with AI, and it's going along with the technology, the needs and wants of the future. It's evolving with what the future, is basically saying is going to be happening in the future with AI, all that stuff. Now, I personally have a high risk appetite too. So I'm going to be honest with you. This was down as low as, let me see, 1,300. Now, guys, when I had that much losses there, and it was at, how much did I say? 1,900. Let me see, 1,300. 1,300 was the lowest it went. Again, it's 8,000 now, but back then it started off with like, at that time it was like 3 to 4,000. That's almost half of my portfolio back then. I know for a fact most people, first off, will call me stupid for investing in that company if they saw that happening and holding for a 2 month period. They would say, "Why are you doing this? You're gonna make your life worse." They'd say that company is, a very cheap company, and it's probably cheap for a reason. So you should just get out while you still can. Be safe, which I don't believe in being safe all the time. You need to be smart. You need to do your research. And you have a plan, but fuck safety. You don't need to be safe. You need to take on risk, and you need to be able to take the right type of risk. So most people wouldn't have been able to handle that downturn. Most people would have been scared, and most people, even if they did have a plan, they would be overthinking, they'd be worried, they'd be continuously looking at the computer, they would continue to look at all negative news, even if it's neutral or positive news, they would take it in a negative light, and they would just justify any reason to panic sell. Not me, that's not what I do, and that is not how I operate with my portfolio. So if you're not that type of person, you shouldn't exactly invest the same way that I do. Now, again, when you do take into consideration market usage, financials, innovation, and just overall, you do your thorough research looking at all the specific factors that you can into a company when you invest, and you know that you have the cojones to be able to hold through hard times, then yeah, you can take a little more risk the same way that I did. Now, um, again, as I mentioned, Will Rich, awesome guy. He has his own YouTube channel, and Stockmates is a community of people that they do their own research as well. They post in the community. They try to help each other out, give each other advice. And again, you can't do all things on your own. You need mentors, and you need people that have similar goals as you to be able to grow. So that's why I'm saying it is important that you do have the right type of leadership, mentorship, and people that can help you along the way. So in the future, I'm gonna give more details in regards to each company. I'm gonna go over exactly day to day what it is I'm looking for. I might also do more day trading again as well. I'm gonna also maybe cover certain news in regards to companies. I'm just diversifying my content, and again, we're gonna also talk more about long term investing. But I just want to show you my progress, showing you that's real, and how grateful I am for all the people in my life that have helped me. So, with that being said, day trade knockouts out. Have a great day.